Hello everyone, today I'm going to be reviewing the last 3 lectures from your accounting class regarding the income statement. So as you've noticed by now, it is simple in terms of the math, like we're basically either adding or subtracting, but it gets really tricky really fast in terms of categories and keeping everything organized. So put on your organization hats and let's review all the terms we learned. So take it from the top. What is an income statement? The income statement is one of the company's core financial statements that shows their profit and loss over a period of time. The profit or loss is determined by taking all the revenues, so it's all the money you make, and subtracting various expenses. And expenses can be, so if we're selling t-shirts, did we pay for the t-shirts that we sold? Yes, that would be a cost of goods sold. Did we market the t-shirt? Did we pay any employees? Did we have rent? Did we travel? And tax, of course. And that gets us to finally our net profit. But this is an oversimplified version. So we have revenue minus expense is profit. That's kind of the basic formula, and that's where you thought the class was going to get easy. But it doesn't. It gets hard. All right, so the way I like to tackle the income statements, so we're going to look at our profit and loss over time. And this famous phrase, follow the money from the movies, is very applicable here. So let's start from the top. All money from any sales or activity, we're going to classify that as revenue. All right? Bam, there's revenue. Now, did you pay for the goods you sold? Like in the t-shirt example, like did we have to pay for the goods that we sold? If you did, we're going to have to subtract that out. There's cost of goods. And then that gets us to gross profit. Now come the expenses, and the expenses are listed, it usually says like expenses, and then it'll have like 3 categories, like advertising or something, and then we have to add them up. So now let's tackle our expenses. Did we have any expenses after our cost of goods sold? Sure we did. Let's say we had $20 in advertising, $100 in wage, $500 in rent, $250 in travel. And this is what you're going to write it out as. These categories are important because each of them gets taxed differently, and it's important at the end of the year to analyze the business from these category points of view. So make sure you pay attention to these. And then you basically just add them up to get a total expense, right? So now this gets us to our earnings before interest, tax, depreciation, and amortization, and we just call it Ebitda. So first we started with revenue, we subtracted our cost of goods sold, got us to gross profit. Then we subtracted all of our expenses, and that gets us to Ebitda. And we do this to minimize our tax liability to the government. So the government can only tax us on this activity, right? Because all of this stuff is related to business and we're not going to pay tax on it. So here comes the tax. The tax in the United States for corporations is currently at 21%. So then we subtract out the tax from the Ebitda, and that finally gets us to our net earnings or net profit, which is what we're looking for, and the whole point of the last 3 lectures. So I hope this simplifies what you've been doing for homework. And next week, we're going to apply this in Excel spreadsheets and actually build real income statements. And my goal for next week is to have you guys building things like this. So we're going to apply that model and organize it all into a nice little table. All right? So email me if for the download for this PDF, or I'll try to make it available on my website. Thanks a lot for signing up for the accounting class. To your success, I will see you in class next week. Thank you very much.